Hi, this is John Prasinos, Editorial Director of Investing Daily, with a video presentation for Monday, May 10. To view our full range of products, visit our website at investingdaily.com. You know, Wall Street overanalyzes every utterance from top officials in Washington, the way the ancient Romans pored over bird entrails looking for omens. Case in point, Treasury Secretary Janet Yellen said on Tuesday, May 4, it may be that interest rates will have to rise somewhat to make sure that our economy doesn't overheat. Yellen didn't say interest rates would definitely need to rise, nor did she assert that the economy was overheating, but the damage was done. The stock market immediately tanked as investors started to wring their hands over inflation. Fortunately, the swoon only lasted a single day, and markets bounced back on Wednesday after Yellen clarified her words. But the incident highlighted a curious phenomenon. The media and a lot of politicians are intent on talking down the economy. The recovery is robust, but unloved. America currently faces the fastest year of economic growth since the go-go days of Ronald Reagan in 1984, when the Gipper proclaimed it was morning in America. The Commerce Department estimates that U.S. real gross domestic product growth came in at 6.4% on an annualized basis in the first quarter of 2021, recuperating 91% of the pandemic-induced plunge. The following graphic breaks down Q1 2021 GDP into four segments and depicts how each component contributed to total growth of 6.4%. Take a look. The government projects that GDP growth will come in at nearly 7% year over year in full year 2021. Yes, businesses are grappling with supply chain bottlenecks caused by the pandemic. Producer prices are rising due to greater demand and shortages. But these are probably temporary problems, typical of booming economies. The short-term gyrations of prices don't necessarily presage lasting and extreme inflation. Indeed, the latest jobs report was a disappointment. The government reported Friday that non-farm payrolls in April increased by a much less than expected 266,000. Economists had expected 1 million. That's quite a gap. The following chart breaks down job gains and losses by sector. The unemployment rate rose from 6% in March to 6.1% in April. A major culprit was the rising shortage of available workers. However, despite all of the white noise you're hearing in the political realm, there's no reason to freak out about this jobs report. The pandemic has wrought a lot of weird economic results that defied textbook theories, improved ephemeral. You should expect the unexpected during this recovery. For example, who knew we'd suffer a shortage of lumber and chicken wings? Friday's report came on the heels of Thursday's data that was more favorable. The Labor Department reported that continuing jobless claims rose last week by 37,000 to roughly under 3.7 million. However, we're still seeing a 4-week moving average for claims that's the lowest since March 2020. Stocks soared on Friday as the mixed batch of jobs data assuaged inflation fears. This economic expansion and bull market don't get much love from nervous market observers, but conditions seem to be in place for continued growth throughout the summer. In the meantime, as the following table shows, the stock market rally is alive and well. Equities closed the week higher and currently hover at record highs. Take a look at this graphic. Looking for an investment trend with unstoppable momentum? Consider the rise of cashless payment systems. The cashless society is rising to new heights, once only imagined in science fiction. The self-service retail market already was growing before the pandemic, but now it's exploding. According to Grandview Research, the global digital payment market was valued at $43.5 billion in 2018 and is expected to register a compound annual growth rate of 17.6% from 2019 to 2025. One of the surest ways to make money over the long haul is to tap into unstoppable trends. One such trend is the ability to buy almost anything with the tap of a smartphone. Mobile payment volume is on a huge growth trajectory. Take a look at this chart. During the pandemic, quarantine consumers got accustomed to mobile cashless payments more than ever before because of lockdowns and social distancing. As COVID restrictions ease and consumers get more confident, this development will accelerate. Even the smallest slice of the payment industry's multi-billion-dollar pie could result in massive stock price growth. After months of painstaking research, we've unearthed a company that's the leader in cashless payments. But many investors have never heard of this company. The time to invest in this little-known company is now, before the herd catches on and bids up its shares. For details about this small-cap play on cashless payments, consult my article that accompanies this video on the Investing Daily website. Well, that's it for now. Send your comments and questions to mailbag@investingdaily.com. In the meantime, stay safe and stay invested.